Okay, so we can go ahead and get started. I would like to just quickly introduce our speaker for this morning, Keith Carlson. Keith is the shareholder director of M&A Advisory Services at VonLehman. And Keith brings over 15 years of experience in M&A, corporate finance, strategy, and capital markets to VonLehman. He primarily obtained this experience from various advisory and direct investment roles. And because he is well versed in both buy and sell, the buy and sell side M&A transactions, he is highly skilled in the areas of deal structuring, company positioning, transaction consequences, transaction risk mitigation, negotiations, due diligence, and financial analytics, as well as financial analysis and modeling. So I will go ahead and turn the floor over to Keith, and he will run through our agenda for today on the COVID-19 related lending programs. So Keith, thank you.
Yeah, thank you. And thanks for the introduction. Yeah. As mentioned, I've got a lot of M&A experience, and as a result of that, I've been exposed to a lot of the nuances that the Small Business Administration has to offer for everyone, not just on moments like these where we're all faced with crisis, but generally more for purposes of completing acquisitions. They've actually got some really nice programs for a lot of people that are acquiring businesses, but for purposes of today, if we want to move to the agenda slide, what we are going to talk about is the two loan programs that the SBA has essentially rolled out over the last 3 weeks. From my perspective, based on the volume of questions that are coming into us at VonLehman and our clients, there seems to be a great deal of confusion about what it is that's actually being offered right now. I think part of the problem is there's been really multiple responses to the crisis in order to help business owners. In particular, there was a first wave or first response that really rolled out these SBA disaster loan programs. And those are fairly common actually in other parts of the country where there's more common natural disasters. The SBA will respond to help business owners who have been injured economically by circumstances that are frankly an act of God or just completely out of their control. So that program rolled out a couple weeks ago, and it's commonly, or not commonly, but is referred to as EIDL, and it's just economic disaster loans is what they are. And it's a very nice program for those that have been significantly impacted. You can go, we'll talk a little bit about how to go, where to go for that particular loan, but there's a nice component of debt deferral payments on those where they can actually postpone payments for a prolonged period of time. And they also offer fairly advantageous repayment terms in terms of length of time that a loan can get established. You can go anywhere from 10 years to 30 years on the payback period, or the amortization, I should say. And also get a fairly nice interest rate right now. And then there's the second loan program, which is certainly all the buzz right now and is really what everyone seems to be talking about. And it's the Paycheck Protection Program, and what we're commonly referring to inside of VonLehman as really a loan forgiveness program. And the reason why everyone is talking about it is the loan forgiveness component. It's always nice when you can borrow money and then obviously get a piece of it that is forgiven or waived. And I'll also add that it's done so on a tax-free basis. And so that's clearly what is on everyone's mind, and they want to know how it's calculated and what the nuances of that are. So, and what we'll talk about at the end of the meeting is what to do next. Okay, if you want to flip to the next slide. So I've already mentioned a little bit about both these loan programs, and really the disaster loans that we've talked about. Just a few more pieces of information that you should probably know as business owners or people that are helping, or management team members in certain businesses, is that you've got currently as constructed right now I think that on the SBA's website is it runs through midsummer in terms of when you can actually go out and apply for these loans. So I think the precise date is actually June 30th on the disaster loans. And what I would tell you is if you're contemplating which loan to take, you really should probably at this point, just based on everything I've read, is you should evaluate the merits of both these loans, but really only pursue one. And so there's some industries where, for example, the disaster loan makes complete sense, whereas in other industries, the loan forgiveness or the Paycheck Protection Program or PPP loans makes a heck of a lot more sense. And certainly what we're seeing is certain industries have been decimated by this crisis. And obviously, a few that come to mind are things like restaurants or hotels where there's just literally, very little or next to no business that's coming through their front doors right now. And so the question is why would I take a loan forgiveness loan from the SBA if I'm essentially just going to have to pay it back anyways? And in that particular case, you really should evaluate the merits of either the disaster loan or the loan forgiveness program, and might even default to the disaster loan. But if you're like a lot of businesses out there where there's certainly some business that is still ongoing, it may not be what it was, but businesses still call it steady or maybe down, 15, 20, or even 30% versus where things were prior to the crisis. This SBA loan forgiveness program is quite attractive, right? Because you're essentially going to take the money from the government. You're going to be forgiven on a fairly substantial portion of it. And then the money that gets reset is done so at fairly attractive terms. And one thing I'll add is there's quite a bit of misinformation out there on each of these programs. And I don't think it's any fault to any advisor or any bank or really anyone that's pushing this information out to various companies or clients. The information is just changing so quickly right in front of our eyes. I mean, the amount of things that have moved from, let's say, just this time last Friday to where we are today has just been tremendous. And in some instances, in a world where we all like to be right and we all like to be first to the keyboard to push information out, that can sometimes be somewhat frustrating. But for example, a good piece of information that came out literally, Wednesday night, I think at around 7 or 8 o'clock, is the reset portion on the unforgived portion of the loan on the PPP loans is now going to be reset at 2 years and basically 0.5% of interest associated with that. Previously, it was 10 years and 4% money, which honestly, from my perspective, is still very attractive. But 2 years and 0.5% is still pretty good. In particular, if your business is still blowing and going pretty well and can afford to service any unforgiven amount of the SBA loan forgiveness program. So Katie, yeah. So in terms of what to do, this is an important distinction. What to do and where to go with each of these loans. And again, this is where it's caused a lot of confusion out on the streets in terms of business owners and where they should go to apply for things. These disaster loans, you must go directly through the SBA website. There's mandated steps on the website. They've changed the rules of the game on the website in several instances. It's been frustrating to a lot of people. I think the SBA maybe underestimated the amount of demand for the disaster loan product when it first rolled out. And as a result, they were completely inundated with companies and their controllers and CFOs coming to the proverbial window to seek loan requests. And they simply just weren't being efficient enough as the crisis started to wear on. So they've rechanged the format. If you've applied for the disaster loan, you might be able to attest to this. There was many people that were mid-application that essentially once they reset the parameters in terms of how you applied, everyone was really frustrated, right? Because then they had to go back through the application process and basically complete work for a second time. And nobody likes doing that with as busy as everyone probably is. And then on the PPP loan or the debt forgiveness loans, you literally have to work through your lenders and your banks to get that. And so the common question we've been getting a lot at VonLehman is who should we take this opportunity to get the PPP loan? And the first answer is check with your current lender if you haven't already. If you're working with one of the major lending institutions in town, the PPP loan has probably been talked about a lot with you from your relationship manager. And if it's not, it's probably time that you start reaching out to them and say, hey, can I get some information on this? Because it's moving quickly, and they're currently not currently taking applications, but they're certainly making sure that people are being placed in I'll call it a proverbial line, if you will, or a pecking order. So you have to work through the lenders. If your bank does not have an SBA program, it's probably time that you begin looking at different banks that can perhaps process this loan for you. And I'm not saying that you need to switch banks or switch your treasury accounts or things like that, but you should, based on the virtues of this program in and of itself, you should be looking at this loan for your company, because anytime, again, you can get debt forgiveness, to me, that's free money. And you should be pursuing this to any end. But the good news is most of the banks in and around the Cincinnati area, and I'm assuming that's what many people on this phone call are dialing in from, or the Cincinnati area clients, Cincinnati and Northern Kentucky, that is. I would tell you that most of the banks around here do have SBA arms and are well equipped to handle these requests. From a program perspective, what I'll tell you is that the banks on the PPP loans are basically running a very formulaic process with regards to talking about what size loan you're going to get. And the PPP loan is very, it's tied to your payroll data. So essentially what they're going to do, the bank is going to do, or they're going to ask you to do actually, is take your trailing 12 months payroll information, which is just all the expenses, most of the expenses associated with your payroll in terms of how you compensate your employees, coming up with a monthly average, and then taking that monthly average and multiplying it by 2.5. That number is your loan program, or the amount of loan that you will be eligible to partake in. And I'll also add that depending on what size company you are, that loan amount is capped at $10 million. So there isn't going to be a lot of companies that probably meet the definition of what the SBA considers a small business, and that will actually bump up against that $10 million loan threshold, but there could be some of you. The other piece I'll add that we've been getting a lot of questions on the PPP loan is people are curious, since this is routing through a lending institution, a lot of people are curious, well, are they going to look at the merits of the credit, from a loan perspective, typically the way that banks usually look at loans? And the short answer is no, they are not. You are going to certainly have to come to the window with the needed documentation to get your loan processed, but their direct attention and focus in terms of providing you this loan is not going to be on your credit worthiness, because it essentially goes or flies in the face of what the loan program is actually intended to do, which is to get companies to continue to maintain employment for the droves and droves of employees that are getting laid off or that are seeking unemployment right now. So moral of the story there with the PPP loans is it's very formulaic. They aren't underwriting a great amount in terms of credit quality. They aren't requiring you to make personal guarantees, which is a very nice aspect that is rare for SBA loans. And they're not looking at your collateral. So you're not having to put up accounts receivable, inventory, or PP&E to substantiate these loans. What we are hearing in terms of when you can actually start applying for the PP loans is still tomorrow. So I'm, given how fast everything is moving, that's subject to change. They could very well come out and tell us that, hey, we aren't going to be able to meet the deadline, and we're going to have to essentially move the bogey or move the target deadline or the opening of the window, if you will, on applications till Monday. But as of right now, most lending institutions are still saying tomorrow. I've heard in some instances that it's going to open up immediately. In other instances, I've heard some banks saying noon. So again, I'll encourage you to check in with your lender, your relationship manager, to ask those questions. And finally, I think the last thing I'll say about this is in terms of the actual calculation for what goes into the payroll data that is calculated for purposes of calculating your monthly payroll average. I would tell you that you should probably work fairly closely with your lender to determine what they're going to allow you to include and what they're going to exclude, because at the end, they're going to be the ones that are calculating your forgiveness at the end of the 8-week period once the loan has been given. And so I would tell you that I would want the person that's checking my loan forgiveness amount to be the one that's also kind of answering questions on the front end about what is actually allowed as part of your borrowing base. So hopefully that's not too much information for you, but just enough to kind of either stimulate some questions or give you a little bit of a primer as to what you should be doing when you hang up this call if you want to pursue either of these loans. But short story is, disaster loan, go through the SBA. PPP loan, go through your lending institution. Also on the PPP loan, what I'll tell you is there are application drafts that are floating around out there. But again, I would encourage you to work with your lender in terms of finding that application and figuring out what they're going to need to substantiate their file. And on this last page, we have some basic summaries of things that we've talked briefly about. But on the disaster loans, you're capped at $2 million on your economic injury. One quick note about the disaster loans: we've been getting a lot of questions about how people or how they're calculating the economic injury to your business. If you go this route on the disaster loan, they've actually removed the function on the website that was previously there, where they allowed you to submit what you thought was appropriate. And now they're simply just asking you for your information, and they're calculating it for you. So it's a little bit frightening that someone in DC is calculating the amount that they believe you've been injured from an economic perspective, just because these folks aren't always the brightest financial minds. But that's essentially what they're asking for. The amortization, like I mentioned earlier, is 10 to 30 years. And on the debt forgiveness, like I mentioned, it's 2.5 times your payroll, not to exceed $10 million. This amount on the bottom that says amortization in 10 years on the unforgiven is no longer true. As I mentioned, that changed Wednesday night late, and frankly, I just now found out about it this morning on another webinar I was joining. So it is now 2 years at 0.5% interest. So with that, I think that really covers the content that I wanted to discuss, and I really wanted to turn it over to those on the call to really ask any questions. Jen, I don't know if you have questions in hand or if you're getting any off the chat function here, but I'd be open to hearing some and answering any that people have.
Yeah, so we've gotten some in the chat. I don't know, are you able to see that from your end as well? If not, I can read them to you.
So I don't think I can see them from my end just because the presentation's up.
Okay, no worries.
But if you can read them, that's great.
Yeah, so the first one, it's kind of long. I've heard that the $10,000 grant portion of the EIDL, if received, would be deducted from the forgivable portion of any PPP loan. Is that correct?
So my understanding is as of 2 days ago, that was correct. That again is an item that continues to move around. They've been moving the standards on it. And so what I would tell you is the last check, they actually described that process pretty well on the SBA website itself. And there's an actual section, like if you go to the EIDL or the SBA's website and then go to the coronavirus disaster itself, they've got a homepage for it that talks about the grants and how those are interwoven with the disaster loan program. But yes, that is my understanding, is it would get deducted.
Okay, and then the second part to that question is, if I am self-employed and do not have payroll, how do I fill out the PPP?
So the PPP loan still is still eligible to you. It applies to sole proprietorships as well. So you can still fill out the loan. I would actually, if you don't have an accountant or some type of advisor for your business, feel free to reach out to us at VonLehman for questions on how to fill out the application itself. But the application is pretty straightforward for businesses or sole proprietors, in my opinion. But we're always happy to help. And the same standards apply, right? If you're a sole proprietor and you're self-employed, you go through it and you treat a lot of the fields as if you are a business yourself. And for the areas that aren't applicable, you just essentially say not applicable. The PPP loan still has to be routed through a bank. And so if you're self-employed, my guess is you might need to take it to a bank that you don't necessarily have a relationship with, but that has SBA functions. And so they would also be a good resource to answer that as well, because they're going to be the clearinghouse on your application. And so different banks are going to have different answers probably, and unfortunately true, they're going to have different takes and interpretations on the application itself and what needs to be populated in it.
Great, thanks. The next question is, what is the actual 12-month period we need to use to calculate our monthly payroll? We have heard differing 12-month periods.
So the one that we're going with, and that is based on our understanding at VonLehman, is essentially April through March of this year. That is the 12-month period that we're advising our clients to go with.
Okay. Next question is, are ESOP companies eligible for the PPP loan?
Yes, ESOP companies are eligible for the PPP loan program.
Next question, as a union contractor, are fringe benefits included in the calculation of payroll?
Ooh, that's a good one. I haven't seen fringe benefits. I haven't seen fringe benefits talked about as an exclusion. So that's a really great question. I don't know the answers to. What I have seen the last 24 hours for everyone's benefit is it seems like many of the major payroll providers have come out with their own interpretation of how your payroll fits into the PPP loan program, because it's such a hot topic. And so depending on who your payroll company is, and if you're linked in with a major provider, you might just ask them how it's handled through their system. And I've actually seen some really nice simulated dashboards or reports that have come out in the last day or two that have been giving clients basically the easy button for what their trailing 12-month average is. So check with your payroll provider on that one, and maybe lean on your accountant for their interpretation of whether fringe benefits are included. I would say yes, but I don't want to lead you astray there.
Great, thanks. Next question. So if a construction job is delayed, but we put employees to work just cleaning or working around the shop, is that okay to use this loan money to keep them on payroll instead of unemployment?
Absolutely. Yeah. And so what I would tell people or encourage people to think about is even if you're going to take this loan and you're going to then turn around and you have to make tough choices about your workforce, even to let's say you got to go lay off 10% or 20%, like this program is still advantageous for you, even if you're not going to just, like you said, move them to the shop or allocate them to other jobs. If you get 80% loan forgiveness or 50% loan forgiveness, or, you know, something less than or something greater than zero, I would say this program is intriguing just because it's essentially free money in a lot of respects, assuming that you can use the liquidity in your business. I mean, it comes at a cost, right? It's 0.5% interest, but where on earth can you borrow money at 0.5% interest if you're an operating company? Only the U.S. government can. So.
All right. And the last question that I see says, is employer FICA expense included in payroll expense?
Yes, it is included in payroll expense.
All right. If anybody has any additional questions, feel free to drop them in the chat. And if not, we'll wait a minute or two. And if not, if you think of things after the fact, feel free to email me. You all should have my email address, and I can get your questions over to Keith and get those answered for you. And then while we're waiting to see if any more questions come through, this is being recorded. So probably by tomorrow morning, we'll email this out to everybody who registered, and it'll also be on our website as well.
Yeah, I mean, I'll kind of add one thing for anyone that's tempted to look at the PPP program. It's a lot easier than the disaster loans. So I think a lot of people early on when the disaster loans rolled out and they went through the process were kind of the process was a lot more daunting, just because the 5 or 6 forms that companies had to go through. It really created such a burden on companies that a lot of people may have been inclined to turn away from the window in terms of getting access to the liquidity. What I'll say about these PPP loans is they've streamlined the process. The requests or supporting documentation behind them seem to be minimal. They're not focusing on credit worthiness or collateral. And so it's really become a nice, in my opinion, a nice program that has well-intended consequences of getting money out onto the streets as quickly as possible. So.
All right, I didn't see anything else come through. So again, thank you to Keith and VonLehman for putting this together for us. And we will get all of this out to you guys by tomorrow, and keep a lookout for other webinars that we have coming up on our calendar on our website. We're trying to get you guys the information as soon as best as we can. So again, thanks everybody, and have a good day.
Thank you.